The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. I'm Alex Pang along with co-host Alex Shanks. The weather is a-changing. You look like you got some jackets on, and
it's a little cold in here. I don't know if anyone else, if you're just listening, well, you're not going to see it, but I'm in my office and my heater has decided that it's not going to work. But the podcast, it's still happening. I'm still going to record, even if I'm freezing.
We adapt, and the show must go on. Well, a little bit about our end. I recently finally changed my summer blanket. I had 2 layers of the summer blanket because it was getting cold, and this week I've been flip-flopping between my fall blanket and my summer blanket. My summer blanket was too cold, but my fall blanket was too hot. So I was manipulating, open the window, making sure the temperature's all the same. But today, I have to admit, being in my 40s, I took a power nap and it was cold. So I finally brought in the fall blanket, and it's good and it's perfect. So,
there you go.
It gets dark pretty soon now, like 7 o'clock. And as soon as we get, I think time change is coming pretty soon, right? We're gonna fall back.
Oh, I forgot that. And I thought the thing was,
man, the days of
meant to have that anymore.
The days of, geez, it's gonna be dark when we wake up and dark when we get off work. It's a sign of hockey season. Football
I'm going
season.
To Mexico.
Oh, you're going to Mexico? All right.
I'm going to Mexico. I'll catch you in a few months.
Awesome. Well, we have a jam-packed show. Alex, why don't you start us off?
Well, the stress test has been removed. Well, I'm not going to give that much point. Don't jump in hooray saying, "Oh my God, the stress test is gone." It is still there on purchases and refinances, but the government did do something pretty big, and it's something that needed to happen. They have removed the stress test on uninsured mortgage renewals. We already had it back in the day for insured mortgages, and this is going to come in effect on November 21st.
Man, thank goodness. We've been lobbying for this in the industry for, how long? Ever since rates have skyrocketed the last 2-3 years, right? Yeah. So, stress test made sense when rates were low, when we were at 1.5%. We knew that rates were not going to stay that low for long. The government, the regulating body, wanted to protect us from ourselves, trying to get used to borrowing money at such cheap rates. And when rates go up, we're caught. At the time, it was 5.25%. I didn't like it at the time, but it turns out that it was good for us. But at the peak, when rates were at 6.5%, we had to qualify 8.5%, 9%, especially if people wanted to get lines of credit. And it didn't make sense. Rates were like, geez, when you're looking at $1 million homes at 6.5%, it didn't make sense. And thankfully, our governing body, our lobby groups, they finally listened to us. Peter Rutledge, head of OSFI, thank you.
It's a big one. And to give people some context of it, let's say you got a mortgage back in the day, maybe you got a $700K mortgage, you got that nice low rate of 1.5%. You could qualify that with about $150K income. That's because you're qualifying at 5.25. Now, today, even if you could get a rate at say 4%, we have to qualify you at 6%. Now, with that, your amortization has also been dropped because you had a mortgage. You wouldn't qualify for that same mortgage today if we had to do it with a stress test. But because it's now going to be at contract rate, you'll only be qualifying at 4%. So if your lender is offering you 5%, but another lender is offering 4%, you're going to get to have that, which is going to bring back competition. Meaning someone cannot say, "I know you can't qualify. Hey, I'm locking you in."
Mm-hmm. Yeah. So what it created when we had to stress test to move lenders, up until probably around the springtime, OSFI, our governing body, doubled down and refused to budge on the removal of the stress test on renewals. They've changed face, or they finally relented. And it created an unfair situation, Alex, where lenders know that because of the higher rates, most people or a lot of people couldn't even qualify for the same mortgage anymore. And lenders know that, and they know that you can't really move it. So why would they offer you the best deal? So by doing this, like, you still need to qualify to move lenders. Like, if your job situation has changed or your work situation, you're in a period where you went from employed to self-employed and you're kind of caught in that middle where you can't really use your income, then yes, you probably have to stay with your lender. But if you are well qualified, it just makes it easier. You don't have to do that whatever contract rate plus 2%. That plus 2% is gone now. So thank you for that.
Totally. I want to bring something up here, Alex. I was talking with someone. They were told by their bank, hey, you shouldn't go with a mortgage broker. You shouldn't go get your financing with them, because when your mortgage, say if you took a 5-year term, when it comes up for renewal, you have to requalify again with a mortgage broker. At a bank, you don't have to requalify again. You just renew. It blew my mind that someone is going around thinking that they wouldn't be able to renew with their current lender if they worked with a mortgage broker. That's not the way it works. We know that, hey, if you get a mortgage and if anything's changed, as long as you made your payments, nothing's changed on your credit, you're going to get to renew with that lender. Doesn't matter if it was with a bank, a mortgage broker, a monoline lender. It shocked me that that's what banks are saying to people.
We do have to clarify that we are shopping the market for you. And if it happens to be with another lender, yes, we would have to qualify you. Yeah, because you'd be going to a new lender. It's essentially a new mortgage. Now, if we can't find you a better deal and your existing lender offers a better deal than what we could find, fair enough. Just stay with your lender. You don't need to requalify.
Stay with that.
We're here to cut through that BS and give you the goods. That's misinformation.
Yeah, that's what I mean. Exactly. I always say it's a second opinion just to get an option.
Absolutely, absolutely. But you know what? We've had a lot of bad news over the past couple of years with all these changes and stuff. Finally, we had a piece of good news, so that's good. So moving on, we have interesting announcement from the BC government. They've reached a deal with First Nations to build 2,600 condos and to sell it at 60% the market value. So this land that we're focusing on is Heatherlands in the west side of Vancouver. And the developers will have to sell it as a First Nations leasehold. So there are 1, 2, and 3 bedroom condos on First Nations leasehold land, and it's a 99-year lease. But the government is going to be financing 40% of it. So you need to pay them back when the unit is sold or after 25 years.
I would like to know how do you just have to pay them back for that? We know, remember the first time homebuyer incentive where the government would help a little bit, but they also got to profit from the equity. I would be interested to see here how that works. Do you just have to pay them back for the amount you owe them, or do they get to take some of that gain if the property gain?
Yeah, I'm betting that it's 40% not on just the original amount and zero interest. It's probably 40% of what the future market value is.
Whatever. And I mean, hey, hopefully it can help some people. Leaseholds are not great all around. Now, First Nation leaseholds are kind of ideal. There's more lenders that will lend on them. There's certain ones that lenders just won't lend on. I mean, in BC, like up in Kamloops, a lot of the properties all on leasehold. And so it's not a negative thing, but I mean, it's an interesting one. Let's talk about some of the thresholds to be able to do this.
Yeah, to stop speculators, because of course you're thinking, oh, I can buy something at 60% off, or just pay 60% of market value. So they want to curb speculators. You need to have an income threshold. It's set at just under 132 grand. So 132,000 or less for studios and 1 bedroom units. Now for 2 and 3 bedroom units, you need to have a income or combined income of just under 192,000. So it needs to be owner occupied, and you cannot have owned any other property in the world at one point. So it looks like it's kind of geared towards first-time buyers, or not necessarily, right? Just owner-occupied. Yeah.
Well, no, because it's just you just can't own another property. Yeah.
Okay, so you mean
now
it
I
needs
like
to be your only one.
Exactly. I like seeing that the income thresholds are higher because like there's other ones like there's places that are already getting financing through the government saying, hey, you're a first time home buyer, we'll help you. But the incomes are at like 88,000. It's like you can't even qualify for the mortgage. You have to have like such a big down payment to even make it work. And so it'll be interesting seeing what the price points are, but I think it will get some people into places.
I don't do that many leaseholds because I'm just speaking from one owner to another. You don't own the land. So if the First Nations band decides to just up and at them, they can do whatever they want because they own the land. You're essentially leasing the land 99 years, and you just have the building on top of this leased land. And so there's a lot of popular leaseholds, especially in the greater Vancouver area. SFU, UBC, there's parts in North Van and south part of Vancouver. Now, one thing, those are First Nations and government leaseholds. Now, private leaseholds are very hard to finance, especially in the A lending and B lending space. Most of the time, private leaseholds, the only option is private lending.
And it's same as looking at a mobile or a manufactured home. Like your property compared to a freehold where you own the land is not going to increase at the same value. And that's the big difference of like, hey, you're looking at this, it's great, it's going to help you get in, but you're not going to get any appreciation from it in the same way. And that's where I could see this for more people that are just like, hey, I need the place to live right now. It's cheaper than renting. It'll be interesting to see at that cost. Could you own and will it be cheaper than renting? That'll be interesting to run the numbers that way.
I'm interested to see how many people take up that offer and if it becomes any of a success at all. But it's something they're trying, so you can't fault the government for trying. All right, what's next?
Try something, and that's where we got the confirmation. So going back to our previous pod there, we did tell everyone about that insured mortgage rules increasing from that 999,000 to 1.5 million. Now, we weren't totally sure what the down payment structure was going to look like. We did finally get confirmation of that from Christy Freeland. Now, if anyone watched the video of her talking about it, it was the most confusing thing I've ever seen. So to break it down super easy for you, everything is identical to what it was before. It is 5% on the first 500,000. Anything above that, it becomes 10%. Now, you have to remember that's like a sliding scale. It's not like, oh crap, I need 10% total. It's 5% on the first 500, and then it becomes 10% from 500 to 1.5 million. And so that's where if you bought at 1.5 million, your total down payment is 125,000. That's the amount that you would need. And it's it's nice to see that. I thought they would have put a different number in there. I thought maybe over the million, they might have said like 15%, but they're just keeping it nice and simple.
So yes, they mentioned the eligibility for first-time homebuyers. So it includes that they've never purchased a home before, and the borrower has not owned or occupied a residence in the last 4 years, and they've either recently experienced a breakdown in marriage or common law relationship that's in line with the CRA's approach to the home buyers plan. So we haven't determined yet.
Yeah, and that's That one's, it's weird. The wording on that's the same with like the 30-year amortizations. They're saying it's only for first-time home buyers, but like the definition of a first-time home buyer based by CRA is kind of how the home buyers plan. And that's, say if you owned a home 10 years ago, you've been renting, you are classified as a first-time home buyer again. So that's where the wording to me is a bit weird. I don't know exactly how it's going to play out.
Now, what's yet to be determined is if the current insurance premiums will change, or if there's an extra premium if you go above $1 million and go to 30 years and such. So one thing that got me thinking too, where we mentioned, unless you're making a $305,000 income, either yourself or with a partner, you're going to need parents to co-sign. But parents, they're usually not first-time buyers. They already own a home. Could they, I guess they can't go on title then. They'd have to be just guarantors in that case, right?
But like, think of this. Maybe you just met your partner. Maybe you already owned a house and now you guys want to upgrade. They're a first-time home buyer, but you're not because you already own a home. That's the same issue here. And so that's where I think the government is going to have to change this of like, hey, this person is a first-time home buyer. Yes, you can still do it even if someone else in the past. I don't know how else you could do it that way.
If it's a case where parents have to be guarantors, banks over the years have really changed and tightened up on what they deem as they can use as guarantors. And the lenders that we deal with these days, they only allow guarantors if they live in the property. And most of the time, parents don't live in the property unless it's a situation where you buy a property with mom and dad together and they live in the basement. They're helping you raise your young child together, kind of thing. But, more and more we've been thinking about it now that it's been released for the last couple of weeks. It's probably more geared towards properties in the 1.1 to 1.2 range. Just over a million to 1.3, I guess. And especially in the lower mainland and GTA, those are townhouses, or how they call it, semis in Toronto. Up until $1 million in Greater Vancouver, Toronto, it's maybe like a 2-bedroom downtown or something like that. So it sounds like this has kind of opened up the townhouse semi range.
Yeah, and that's where, we always talk about the missing middle. This is where I think like we're going to see more developers building those places that are like a semi with like a 2-bed, say 2-bath, but also with a 1-bed or 1-bath suite below it. For people to qualify for these type of mortgages and stuff, they need rental income to help them and even just offset the expense. We know if you did get a $1.5 million purchase with a mortgage, your payments are $7,900. And so we need some rental income to offset that.
Absolutely. Well, this kind of came out not too recently. According to StatsCan, BC has the lowest fertility rate in Canada. No surprise, as we are the most unaffordable province. And of course, guess who's second? Ontario. Surprise, surprise. Canada has joined South Korea, Japan, Italy, and Spain as the lowest low fertility rate in the world at 1.3 children per woman. And it's the lowest ever fertility rate for the second year in a row. Now, if this trend continues...
What's the average? What's the average? I know that you pulled this data here for us, Alex. Like, what's the actual average of like other, like, what's the norm? Is it like 2 or 3? Like, what's the actual norm for a child per woman?
I don't know. I think on the other end of the scale, it's probably more in the third world countries. Like we're talking like India, Africa, maybe South America.
Yeah.
I'm certain it's above 2, could be 3+, right? So, but man, 1.3. Now, someone said if this trend continues, our population will be 80% less than it is today in 3 generations from now. That's astounding. Like that's almost approaching. Japan's been through that? Has been going through that for the last decade or so, right?
Well, because they were like they had too many kids for a while. Was it not a thing like you weren't allowed? And now it's like now they don't have enough kids. This is why we have immigration. Canada, and we've known that our fertility has not been great, but we've counteracted of bringing too many people, trying to reduce this effect, and now I think we're seeing some of the effects of it.
Yeah, if you think about it, if it's so expensive to live in our country, I'm just speaking just speaking BC and Ontario in particular, people, having good jobs and such, and they barely can survive. We love our kids, but they are expensive. I heard the stat that's saying if you raise a child from birth to 18, what was that number? Was it like $1 million or something like that, or $2 million? I don't remember that number, but it's something crazy, something outlandish.
I hope that's not true.
Just because of that, the cost of living so high here, it's no wonder people are choosing to have less children, if any at all. I have friends who are in their early to mid 30s, and some are choosing not to have kids. That's more so, I'm hearing now, than it was 10 years ago. And it's how quickly things have changed in our country.
Well, think of it in Vancouver. If you get a condo for 2-bed, 2-bath, you can't even have more than 1 kid. Where does everyone even actually sleep? It starts to get the crazy thing. There's not even enough space. And that's where it's an interesting thing. Kids are great, but for me, I always think about, well, how are my kids going to afford a house? I know we talked about that before of the investing with our past co-hosts saying people are buying houses right now for their kids for the next 20 years.
Yeah, it's not good. Not good. Well, sorry to poo-poo on this more, but there's something else that came to light is there's this proposal that's been going through the House called Bill C-71. So it's an amendment to the Citizenship Act that will allow Canadian citizens who are born outside of Canada to pass on their citizenship to their children who are also born outside of Canada. So what this would do is it would create a never-ending chain of migration until the end of time. So I believe they tabled their first reading in May, and I haven't heard anything else about it. We've talked on end about the immigration crisis that we're having in Canada. This is not helping. This is just compounding the problem.
Oh, exactly. I mean, if you're not living here, it's just you're passing on like a ticket for something that doesn't really exist. If you're living in Canada and you have a kid and maybe you go back to another country, that makes sense to me. Like being able to do that, but not just passing on to people that aren't even born here.
Exactly. And there are some people who never been to Canada, but because their descendant has citizenship that they immigrated to Canada, it allows them a backdoor way to come to Canada, and it essentially waters down our Canadian citizenship status. Like there's no benefit to actually being born here as a Canadian born citizen, to be honest with you. So there's this.
I could definitely see in other countries, people are going to be maybe marrying into people just to get the citizenship. Because I mean, we know there is immigrants that makes it like they work their asses off to get here. I mean, they could be doctors in other countries and they're coming here and working at McDonald's. And I mean, then you get people like this that just get to come in because their great grandfather was a citizen.
Yeah, I hope this does not pass because this is not right. There was a petition going around Twitter that was calling for immigration to be reduced by 200,000 a year. And we know that the government has been saying, oh, we are going to build 4 million homes by 2030. And we worked out that math. They would have to work 7 days a week, 24 hours a day, and to even come close, and they still would come up short. And we know that's not realistic.
Yeah,
so
I think they need to build. I think you need to build like 1,000 homes a day or something.
Yeah,
like it's a number that's not going to be met. And I mean, our housing starts are down. Our housing starts are down right now, which is not good.
So I mean, we're going to repeat this again. We're not trying to say no immigration, but just slow it down. There's a huge imbalance of, just think of it like water pouring into a bucket and it's just overflowing. I'm like, can I slow down the taps or something, like just to make sure things catch up just for housing supply? I mean, I signed the petition. I know it's going to go nowhere, but let's see, power to the people kind of thing, right?
It'd be nice if we had the power to the people, but it sure doesn't seem like it works like that.
Yeah. So I think it's time for viewer mailbag, right?
The best time of the night.
Okay, so I'm going to read the first one here. So I bought a home 20 years ago and sold it 10 years ago. And I'm now looking to get into a new home. Do I need to put 20% down now?
Do you think this is like the biggest myth out there in the mortgage world? I feel like this is like the biggest myth. Everyone thinks after they buy their first house, they have to put 20% down. Let's bust that myth right open. The way it works in Canada to put a minimum down payment is it has to be a principal residence. You could have bought a home 3 years ago. You now want to go and buy another place. You bought a condo. You want to go buy a townhouse. You're even going to keep your condo as a rental. You get to buy that new townhouse with a minimum down payment. So you don't have to put 20% down. You could do this 100 times. I mean, we talk about it, but it still seems people get really confused. They're always like, well, I got to get the 20% down. I'm buying my second home. And I'm like, no, you don't. You're buying it to live in.
In reality, you can still put 5% down each time. You just have to pay the insurance each time and be okay with it.
Exactly. Yeah, it doesn't. It may not make financial sense to do it, but just telling people that you do not have to have 20% down to buy your next house.
No, agreed.
So I got one here for you, Alex. These people, I'm on a variable rate. I've seen that rates are decreasing, but my payment hasn't changed at all. They're wondering, we saw 3 rate decreases. What's going on?
They are most likely on a fixed payment variable, which means if the interest rate changes, your payments stays the same. Now, during COVID or during the last couple of years when rates skyrocketed, their payments stayed the same, but the rates increased to a point where their payment no longer covered the interest. And this is where we all became familiar of trigger rate. And a lot of mortgages went into negative amortization, meaning your mortgage balance actually grew because the payment was not even covering the interest. Now, there's only one bank, RBC, that didn't allow negative amortization. So they did have to increase your payments up into the point where you're paying like maybe $5 of the principal. Now, for everyone else, you're in a negative amortization position. A bit. Now that rates are coming down, your payment still stays the same, but your amortization is not 99 years anymore. It's now coming back down to earth, like 75, 60, 50, whatever it is. Now, there's 2 other major banks that have adjustable rate.
Back down to earth.
Yeah, coming back down to earth. Now, like there was a period where I'm with one of the big banks and I didn't even look at my mortgage statement for a while because it was depressing. It was 99 years. I'm like, okay, it sucks right now, but let's just get through it and it'll come back down to earth eventually. And those days are come. I can open up my eyes again. Yeah. So there's 2 major banks that have adjustable rate mortgages where your payment will change with prime rate, and that's Scotiabank and National Bank. Now, there's other lenders like monolines, which are mortgage finance companies, which only deal with mortgage brokers. They are also adjustable rate mortgages, which fluctuates with prime. Now, when people are shifting more towards variable rates and, it's sexy to look at it again, so to speak, make sure when you're talking to your broker or looking at the bank, ask if it is a fixed payment variable or adjustable rate mortgage. Because it's important, right? Do you want your payments to go down or do you want your payment to stay the same and pay it off faster? Those are important things to ask when the time comes. Long story short, that's the reason why your payment didn't go down. You're on a fixed payment variable.
Yeah, make sure you know what one, because if you're taking the variable for a lower rate, you don't want to be on that fixed payment.
Or if you can handle the fixed payment and your main goal is to pay it off faster, by all means. But have that important question where you care more about monthly cash flow or you want to pay it off faster. So, all right, we have a final question here.
Exactly.
If I open a first home savings account today, do I get to deposit $8,000 or $16,000 because the account has been around for 2 years?
Yeah, this one I find it really, really confuses people. And I'll tell you how it works. And so the way it works is you only get that contribution room once you open the account. So even though it started a year ago, if you open it this year, you're only going to get to put $8,000 into it. Now, the way it works for your TFSA, your RRSP, that account grows even if you don't have it open. And that's, to me, like, I really believe the government should change that of like, hey, this account has been around for 3 years. You should get the contribution room from it. Now, it also only compounds 1 extra. So let's say, Alex, you open the account this year. You just don't have $8,000 to put into it. Great. You've opened it. Next year, you're ready to put money in. You'll get to do $16,000 next year. But if you wait till the following year, so your 3rd year, you won't get another $8,000. It'll just be $16,000 in total. So it doesn't go past 1 carry forward year. It only allows 1 carry forward that way.
So in other words, if I open it today, don't have the money next year, I can't put $24,000 2 years from now. Okay.
Exactly.
All right.
That's where it's still, but like today, you want to get it open. The sooner you can get it open, the better.
Well, yeah, a lot more people should be taking advantage of the first home savings account these days. I mean, it's not much, but it's something.
I call it free money. You could have an offer on a house today, put the money in it for less than a day, depending on your tax bracket. You could be getting anywhere from a $2,000 to $4,000 tax return. I hear that people don't even know about it. I'm like, man, this is free money.
Well, folks, if you're a first-time buyer, open a first home savings account. Okay, I think this about wraps it up for our episode. For my co-host, Alex Shanks, I'm Alex Pang. Thanks for tuning into another episode of the Canadian Mortgage Show. We'll catch you next time.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.